Recently, the world of crypto has been suffering, and this is natural considering all the inflation in the world right now. However, some people have their entire fortunes riding on crypto, like the Winklevoss twins. So let's see how the crypto crash affected them and how they've managed to bank a fortune with its comeback. Starting with, who are the Winklevoss twins? You've probably heard of the Winklevoss twins from the movie The Social Network, maybe? If you haven't, the now billionaires once accused Mark Zuckerberg of stealing their idea for his famous social media site Facebook. This lawsuit went on for a long time, until 2006 actually. Mark Zuckerberg, the owner and founder of Facebook, ended up having to pay $65 million, both in cash and Facebook shares. The Winklevoss twins already come from a family of generational wealth, and they knew exactly how to put this money to good use. In 2012, it was rumored that they bought 1% of all existing Bitcoin in the world. In the next year, they announced that this was $11 million worth of Bitcoin in total. After that, you can imagine, they've just continued to rack up their crypto fortune because the value of Bitcoin has kept increasing consistently. Now, the two twins are worth over $5 billion each. That's some smart investing. The Winklevoss twins have a whole fortune riding on crypto's comeback. Yep, you read that right. We aren't exaggerating by saying a whole fortune, because the twins are dependent on crypto for their net worth. Their fortunes are invested in tens of hundreds of crypto startups, ranging from trading startups to tax facilitators. Did you know that now the twins are worth over $6.4 billion each, according to the Bloomberg Billionaires Index? However, the collapse of TerraUSD and more has caused a significant loss of their wealth. So far, here's what we know. Even after the collapse of Luna and TerraUSD, the 40-year-old twins have still been receiving money from venture capitalists all year. It's rumored that they made over $5 billion in the first few months of 2022. Despite all this, they still lost quite a bit of money because of the overall economic instability in the world right now. Cryptocurrencies have had their ups and downs, and risk is a crucial part of investing in them, but we can safely say that right now, the twins have suffered the greatest loss to their net worth from investing in crypto. Apparently, they lost over 40% of their whole net worth, which comes up to a whopping $2 billion each. They've certainly taken quite a hit. Other digital currencies, such as Ether and Bitcoin, have been in a decline in terms of their worth, considering that Bitcoin is down 50% from last year's peak. Venture capitalists, for the first time since 2017, are starting to hold back from investing in startups, specifically tech ones. It seems that things are going to be pretty bleak for the time being in the digital economy, even though the twins have released a statement saying that they will continue to support and invest in the startups of young entrepreneurs and risk takers. It's clear that they too are taking a large risk, with a whole fortune riding on crypto's comeback. On May 14th, after the largest drop in a while, Cameron Winklevoss tweeted, "It was a rough week, but the underlying fundamentals haven't changed," reassuring people about the importance of crypto and what it means for the future. We can definitely see how these two made it to the top, with unwavering faith and a positive attitude no matter what. They keep reminding us that cryptocurrency is definitely a long-term investment. And now, sad news for the Winklevoss twins Gemini. The twins have a company that they formed in 2014 as a safe place to trade and exchange crypto. Unfortunately, just this week, 10% of their workforce has been laid off. According to them, the whole industry is in a contraction phase. It's been a pretty tough week for cryptocurrencies overall, with $500 billion just wiped out completely from the market cap of TerraUSD. Gemini employs around 1,000 people, and around 100 people will be impacted by this decision. While we don't know how long this crypto winter will last, we definitely know that it's caused many companies to take extreme measures. In a memo sent to all the staff, the Winklevoss twins assured their workers that even though it's a tough day today, it'll be beneficial in the long run. What do you think the future of crypto is looking like so far? So, what should we watch out for when investing in cryptocurrency? The twins have often been called pioneers of the crypto world, considering everything they've done to make it more popular. They knew early on that the digital economy is the next big thing, and invested very smartly. What can we learn from them? Firstly, they know how to spend smartly. Even though they owned more than $1 billion worth of Bitcoin in 2017, they didn't even own a car. One of the brothers owned a car in 2018, and even this was a second-hand vehicle. Clearly, they've lived well below their means. We can definitely learn how to save. Secondly, the twins knew the value of investing in the long run. Even though Bitcoin's value has fluctuated a lot since its early years, they were confident in their investments and kept on making smarter moves. They also invested in other budding cryptocurrencies, such as Ethereum. The New York Times reported that in 2018, they held $350 million in this cryptocurrency. Investing smartly is definitely the way to go. Lastly, the most important thing is to use a well-reputed crypto exchange company to invest. The Winklevoss twins founded their own, Gemini, Gemini in 2014. This platform is one of the safest in the world to invest in, store, and buy cryptocurrencies. Unfortunately, the twins had their fair share of bad experiences with crypto. They invested in an exchange company only for the owner to be arrested for illegal activities. The twins learned an important lesson that day. The digital economy has been pretty haphazard this past week, but many people still have faith in it. After all, things do keep fluctuating in this particular market. Let's look at some more related news, starting with Logan Paul announces NFT collection. Logan Paul has had a pretty long-standing career, and he's dabbled in a bit of everything. He started out on YouTube, became a boxer, runs a successful podcast, and now is apparently making NFTs. Many celebrities have hopped onto this trend as of late. He's making original NFTs, inspired by his love for boxing and other stuff, saying that he remained authentic to his true self while making them. Paul has also announced a docuseries along with his 99 Originals NFT collection. The NFTs are being auctioned with no set price in the beginning. They're available to purchase through cryptocurrency only and will be available on his website. The auctions are supposed to run for 24 hours. The rules are pretty simple. Each bid needs to be 10% higher than the next. It's expected that Logan Paul's big fan base will bring in a lot of money for him, but who knows? What do you think of this whole ordeal so far? And now, Deepak Chopra encourages investors to invest in crypto for the benefits in the long run. As you've probably seen in the first part of this video, the crypto world is in crisis right now. We don't know how long this will last, but many people think that it'll be over soon. Perhaps this is the best time to invest in crypto after all. Led by TerraUSD, the collapse has certainly shaken the crypto world. We don't know how much longer this will last, and there's quite a bit of uncertainty surrounding the whole thing. Deepak Chopra, however, has urged people to stay steadfast in their crypto investments so far. He stresses the importance of thinking long-term and tells CNBC that it's important to remember that a spiritual and emotional ecosystem where people help each other exists in the crypto community right now. So, people should take advantage of this and start investing long-term. Chopra is one of the best-known authors and contributors of New Age medicine and has invested in crypto. He's definitely taking a slightly different angle on this whole crypto collapse, but maybe that's what we need after all. And finally, regulation, another consequence of the cryptocurrency crisis. People have long used cryptocurrency and their money held in it to escape paying taxes and escaping regulation. Even though cryptocurrencies are expensive to use for normal transactions, policymakers still see them as something that needs regulating. Many citizens from developing countries are also investing in crypto, and governments are increasingly viewing this as a threat. For example, in Venezuela, crypto is used to send money back and forth, sometimes even illegally, and all of this escapes the notice of the government. Well, we can't really implement global rules for crypto. More people think that even regional regulations might be beneficial at this point. It won't fix all the problems in the world, but it'll definitely help solve smaller problems. That's a wrap for this video. What do you think the future holds for the fortune of the Winklevoss twins? Let us know in the comments below. Make sure you give this video a thumbs up and subscribe to our channel for more videos like this. See you in the next one.